Hey everybody, Allison at Homeowners Financial, and a question we keep getting is, hey, rates are moving. Why should I buy now? Should I wait? So I want to give you some data points. Now, if you look at where rates and how rates move, basically, if you watch that 10-year treasury, because that's investing in America at a decade at a time, and a mortgage is investing for you for 30 years at a time. You watch that 10-year treasury, as that moves, that's going to tell you how rates will move. Now, when I started in the business 23 years ago, rates were at 6.5% at like a point, and that was considered awesome. You've heard the stories of the 80s, the 70s, when they were 18%, 12%, 20%. And then people counter and say, yes, but prices were so much lower. I'm like, yes, but it's all relative. So here's the deal. Really, anything under 6% is a great interest rate. Rates are trending up higher. They are still lower today than they're going to be a year from now. Prices are lower today than they're going to be a year from now. So if the long-term intent is for you to have a property which has stable payments, so you have a stable place to live with equity that grows over time, then it's irrelevant what the rate is. What matters is this within your budget. You could have a rate of 2% and not be able to afford the payment. You could have a rate of 5% and be able to afford the payment. What matters is your ability and your stability. This also doesn't mean that if rates come down in the future, you can't refinance and capture lower. But again, if that intent to purchase a home, which is the only reason I tell people to buy a home, is if you like it and you're comfortable with the payments. If you like it and you're comfortable with the payments, that is what matters. Investing in real estate long-term is one of the greatest gains America has to establish wealth and financial freedom. We get tax benefits from those deductions of the interest of the property taxes. We can gain up to $250,000 single, $500 jointly tax-free in capital gains. So if you bought it at $100 and now it's worth $6, that's tax-free money. Where else are we going to be able to do this? So why should you buy a property as rates go up? Again, if you're comfortable with the payment and you like the house, then do it. If you're buying something you think you're going to sell in 2 years, it's never really a good idea. You don't really know what that risk is. So hopefully that gives a little avenue. If you want to run any numbers, certainly happy to do any cost of waiting scenarios. It's Allison at Homeowners Financial. Make it a great day.